Hello, and welcome back to the Trading Triangle with me and Kaye. How you doing, Kaye?
I'm doing great, Sean. Good to be back after, 2 weeks of gap? Huh?
Yeah, absolutely. A lot's happened in the market, and also we'll dive into that in just a second. But just a quick disclaimer, we're just a couple of guys looking at charts on the internet, just what we love to do. But of course, it's not financial advice. And obviously, thank you very much for Wolf for the partnering with this episode. And this is obviously his platform, so we really do appreciate the support there. And lastly, obviously, you can subscribe at the bottom of the tank corner there for the YouTube channel. And then, lastly, so many things to talk about. Don't forget to get your ticker requests in. I'm sure Kaye's writing them down already. I think we've got Google and NVDA lined up already.
Yes.
Obviously, keep putting them in the chat as well down below on YouTube or obviously on X. Anything to add, Kaye?
No, I think we're good to go. We can kick it off.
Awesome. Right, let's get into this. Been a while. Right, here we go. Last week in the market, we've got a bit of a mixed bag, actually. So we've got NVIDIA here, obviously almost up 5%. Meta, 3.4%, and you've got the big ones as well. So Apple down 8%, Google near enough 8% as well. And on the right side of the screen, my cursor allows it. There you go, they've got Tesla as well, down 10%. What are your thoughts here, Kaye? Anything pop out for you?
I think it's a good pullback. I did not follow much on why Apple pulled back. I haven't been tracking the stories, but I know why Tesla pulled back, and I think everybody knows why Tesla is pulling back. There's just a lot of controversies around Elon Musk, and I think that was going to continue for the remaining time, whether the stock goes up 10%, whether the stock goes down 10%. Until he is out from the limelight, that's going to be on the stock. Like it or you don't like it, that's how it is. But I didn't follow why Apple was down. Do you know?
No, I think it's just general market sentiment. I didn't see any news related to that. I thought it was just kind of putting back down with the SPY and QQQ. I could be wrong, but I just didn't see anything myself.
Got it.
Hello, Chris. How are you doing? Obviously, put your request in the comments below. I might just leave that caption just in the screen for now so people know what to do. With that, then we'll move on to the next slide, won't we? I mean, overall in the markets, the earnings are coming in okay, but people are kind of dropping down, aren't they?
Well, if you think about it, right, the job numbers came out. That was pretty bad, right? We added less jobs. There are no cuts in the market anymore, at least not on the table right now. No interest rate cuts.
Coming eventually.
CPI, PPI numbers are going. So the whole problem was that, if you think about it, how is it possible that you're going to tariff countries and your GDP numbers will not get impacted and your inflation will not get impacted? We have a bird flu going on, so the egg prices are off the charts. Yes, it's been going on for a while. It was full credit to Trump. It's not because of Trump. The bird flu was before even Trump took office. So we have had this egg problem for, I guess, now running more than 2 months. Costco, you can't even find eggs anymore. And when you go to the other stores, you find eggs. Those are expensive eggs. I remember I went to Amazon Fresh to buy eggs. 18 eggs costed me, I think, close to $14 or something like that. So if you are, depending on the type of egg you're buying, it could even go much higher. So that the egg problem is still there. And the problem is a lot of patching up has been done by the manufacturers because now they're anticipating tariffs. So they are already patching up slowly and they're increasing the price for their products. And let's see, last week we saw a lot of announcements of layoffs. Meta, as usual, is laying off 5% of its workforce. Microsoft announced layoff like 2-3 weeks back, and you will start to see these layoffs. Now, I will say one other thing. This is if you work in a corporate, this is a pretty standard process. Generally, the first quarter is when bonuses are paid out, and this is a very good time for companies to do job cuts. So, yes, people like to just put all the blame on the government and everything that's happening, but let's understand the mechanics of it. This happens every year. This is not a unique year. So that's my take.
Yeah, I did think we'd come onto the stream talking about eggs today, but that's good to know. Someone mentioned tariffs as well, T-peaks on the on the screen obviously mentioned tariffs, obviously a big player in what happened on, I think, Monday as well, and then obviously a bit rebounded because of Mexico and Canada kind of going back on it. But yeah, that's kind of the market obviously overview for last week. Fear and index, we're actually kind of in fear still, believe it or not. We'll jump into the charts in a minute for SPY and QQQ. But you can see the performance for SPY 1.3 up and QQQ 1.9 up as well. IWM doing really well, actually, over 2% on the week. I did have a little bit of research and analysis towards IWM through the week as well. I don't know if anyone saw that. And obviously key events, you've written here CPI and PAL testimony and PPI as well, respectively, probably Wednesday, Thursday, is that right?
Yeah, I think 2/12 is what, 10?
Yeah, Wednesday, Thursday.
Wednesday.
Valentine's Day is Friday, so
Wednesday and Thursday. Yep.
Yeah, so interesting amount of data there coming out, and obviously people talking, Fed speakers need to always be aware of that, especially if you're day trading, which I have dabbled in a little bit more in the last few weeks, obviously, but mainly I'm a bit of a swing trader. But that's it really for that. Any comments on the Fear and Greed Index? Do you like where it is or not so much?
No, I mean, honestly, the put to call ratio was closing 0.74 a couple weeks back. So I think we are in a better shape, even though the fear and greed does not reflect that.
All right, with that, we'll move on to earnings. Obviously, earnings season is well underway. We've had all the big tech earnings now, and now it's a bit more kind of towards the smaller cap names. We've got Shopify here. I think there's one that's kind of points out to me, Coinbase as well. I've actually really looked at this properly. We've got Robinhood, which is a really good one. Lots of people love that one. And obviously DraftKings as well. Super Bowl tonight. Well, tonight for me, today for you. Are you watching the Super Bowl today or not so much?
No, I don't watch sports.
I'm sure lots of other people were. I don't even know who's playing, to be honest.
I know folks are super excited about it. I know a couple of my friends, they have a Super Bowl party or something. They invited me. I'm like, I'm not going.
If someone can comment who's playing, we're going to guess who's going to win just completely by chance, just for a laugh. So put in the chat who's playing, and then we'll have a little bit of fun with that. Anything on the earnings chart here that you like?
I love Monday's reporting on Monday. So I don't know if you follow the SaaS space. So Monday, I'm watching SMCI that I'm covering today. I know couple folks are tracking Reddit, so I'll see how Reddit performs. And then for me personally, Datadog, Tulio are the other two stocks, and Palo Alto. That's what I'm focused on.
It's interesting seeing Reddit at the top of the list. Normally you have like Robinhood and it's interesting to see that. Maybe it's done by market cap perhaps, because obviously I know Reddit's doing really well recently. So perhaps it's something like that. But yeah, we'll move on to the first chart. Excuse me. SPY. So we had a very red day on Friday. You can see that indicated with the candle. And I've kind of drawn this out a couple of days ago, or a couple of trading days ago. And I'm just going to leave it there because I do like this level of a bounce around 598. And if we don't hold that, of course, and we break a bit lower, I'd like it to kind of revisit this gap down here between 585 and 590 for the SPY. But if we do get a bit of a bounce, obviously back up to kind of all-time highs-ish and then make a move a little bit higher. But we've had all the big tech earnings now, so nothing's going to move it so dramatically. But maybe we can go back to kind of a bit of a grindy bull market situation where we just kind of trundle upwards. Any thoughts on the SPY, Kaye?
I think the biggest mover is going to be the CPI number, Powell's testimony, PPI numbers. So Wednesday and Thursday, that is going to be pretty volatile. And the put to call chain is actually very volatile, especially heading to the last day, which is 2/14. Our put to call is 2.68. So throughout the week, we are 0.9, 1.29, 0.7, 1.28, and then it jumps to 2.68. So a lot of contracts are going to expire, but the put to call is much higher on the Friday.
You're going to be trading around that time or not so much?
So I'll be trading most likely some of the names during the earnings, but not specifically SPY.
Awesome. And move on to the QQQ. Similar sort of stories. So obviously in the SPY here, kind of coming down to the 20-moving average, that's the support. But then on the QQQ, we've got the 20-moving average again here with the trend line and the 50-moving average and all of this volume on the right side. So it's a little bit of a confluence to kind of go long here. But like you said, with the CPI and PPI, which I completely forgot to mention in the SPY, so luckily you did. It could be an interesting point for a bit of a bounce, obviously, especially after a big kind of red day on Friday as well. So this is a bit of a key support level for me. And it's kind of, let's say 522. Any thoughts on this one, or are you looking for something different?
No, I definitely want to see a bounce from that trend line, but I also have to say this, right? Unlike, you know, last year, 2025 is going to be very, very volatile year for us as a trader or an investor. And because the problem is that every other day you don't know what the news will come out. So this has become like a reality show now. Every day there will be a news that comes out and it's going to impact the stock market. So, you know, keep
Yeah,
that in
so I think the market goes through cycles for sure. I mean, recently in the last basically year or so, it's been a bit of a swing trade market, of course, because the stocks have basically just gone up. And typically, when you swing a stock, you swing it upwards,
Yeah.
just because you've got that kind of nice, smooth, moving price action for the stock. But on the other hand, if you get a bit more of a choppy market, like you can see on the screen here, that's perfect for day traders. Even if you have to hold it over for one day, and obviously it's not ideal because you're kind of having leverage and things like that kind of turn into play, which is why I've kind of turned my focus a bit more towards day trading. Just because of the choppy price action, you can make some really good money during the day. But yeah, no, just want to add on to that. Okay.
No, lovely. Let's go ahead. Let's move on.
Awesome. So the first stock of the day for me is Tesla. We're looking at the weekly chart here, and of course you can see lots of kind of basically sideways price action since the middle of 2022. And obviously towards the end of the year, obviously with the election and Elon Musk doing Elon Musk, we had a bit of a push coming into the end of 2025, and then obviously subsequently kind of bringing back down. And obviously we had earnings a couple of weeks ago, which I think were slightly underwhelming. You might have a few more comments on that in a second. But yeah, I basically like this 346 level. One, because obviously that's a kind of previous resistance zone. And obviously the 20 moving average for the weekly charts coming in here as well. Not a huge amount of volume, but I do like the fact there's a little bit of a peak there. So 346, if I see that this week, I'm very interested. Any thoughts on Tesla, Kaye? I know you have a few thoughts.
Yeah, I have a lot of thoughts on Tesla because that's actually the funny part is that Tesla is one of my top 5 stocks for 2025. But at the same time, we do see demand, really declining across the world for Tesla, in various markets. Now, you could put that as an anomaly for various reasons that a Model Y refresh is coming out, and that's the reason. But then there are also political implications. So without getting too much political, I think I like the level that you have. I would also look at the 334, 330, 334 because that's where the point of control is for especially the big volume shelf that's coming in. So if we don't see a bounce from 361 or between 354 and 361, we could see easily the price pulling back to 335, 330 level, and we do see a lot of support at that level. If we can see a bounce, that will be great, and we can probably see another pullback. But right now, the chart is actually showing. If you move to the daily, you will see that the trend has reversed. Now we are making lower highs and lower lows. So until that reverses, we could continue to see a free fall on Tesla. So yeah.
Definitely worth keeping an eye on. The level I have at the top here, you can't quite see on the screen. If you're viewing it, it's 489. That's an all-time high. So if we were to get a bit of a bounce here, of course, that would be my long-term target, but not my initial short-term target, of course. So yeah, we'll move on to my next one, which is DraftKings. So of course, this is a bit of a Super Bowl play. I thought I'd bring this one up because it just kind of made sense. We've got successive kind of higher highs with the blue arrows on the screen. And no, sorry, higher lows. My apologies. My higher lows here with the blue arrows and the higher highs with the red arrows. Now, quite simply, we've got a bit of a trend line coming here, especially with recent price action. I do like to see recent price action following the kind of resistance of the trend line. If we do get a bit of a breakout in the next, let's say a couple of days, I would like it to break 43 also as well. Maybe come back down for a retest and obviously shoot higher towards that kind of $48 level, which is actually a previous resistance point, which I didn't put on the screen because it's going to be too small to see, which represents about 11%, which is actually pretty good in my opinion. I kind of aim for around 10 to 15% for my initial first target price with any trade, to be honest with you. Just lastly, of course, is just kind of above all of this volume profile on the right side here, and of course above all of the moving averages, which is what I like to see when kind of a trend is about to be started, let's say. But yeah, still work to do to kind of get above 43. Yeah, what are your thoughts on this one, Kaye?
Hey, listen, I think every time you have a big sports season coming up, DKNG just is a good trading opportunity, I believe.
One thing I will say actually is that the earnings are on Thursday, so do be careful if you are looking at this as well. It's always tricky to take stocks through earnings. I don't do so much anymore. I know you don't either, Kaye. Every now and then I will, but that's only if I'm kind of really up on the position. I can afford to kind of take that hit if it was to kind of go down further. But yeah, no, it's just be aware of Thursday earnings after the close. And that's it, really. We've had a few kind of comments come in around, obviously, requests, so keep them coming in. I kind of paused there. I had a bit of a brain freeze. Keep them coming in. Obviously, stick them in the comments. We've got loads of them written down already. But we are flying through today's session because I think we're just so excited for the week ahead. And obviously, with that, we'll move on to the next slide, which is about me. You can find me on X. I post on there fairly regularly around trading ideas, trading psychology, risk management, all of that jazz. And obviously, YouTube, I'll be going live a little bit more in the future. And obviously TTR, which is the trading community that you can join for free. There is obviously a bit of a paid section as well in there, but you can join for free by heading over to my X profile. And obviously the link is right there in front of you. We'll move on to your charts now, Kaye. What have we got first?
All right, the first one is SMCI. So right off the bat, I will put this as a disclaimer that SMCI is a very highly volatile stock. So if you don't want to, and they report earnings, by the way. So if you don't have the risk appetite, I would not recommend even entertaining this trade. So the trade is as simple. So if you see this downtrend line, that we saw a good breakout on this downtrend line, and we are seeing a very strong movement on the stock. I have put these two lines, the expected earnings move. Those are actual earning moves from the last 3 or 4 quarters that we have seen. And generally, there's like a 14 to 15% upside swing. Now, again, those are average. Doesn't mean that this is exactly going to happen. That just gives us a little bit of an idea how the stock could move. If you look at the bottom line, which is around the 30.55, that's also near where the biggest volume shelves are. So there's a lot of trading that's going to happen in case we see a decline on the stock. The upside potential is a good 36% upside potential to the first resistance of 49.53, and that is what exactly I'm aiming. Now you can play it many ways. I'm playing it in a way that I have stock options. I have stocks, common stocks, and I'm also going to be opening options. The key is, and I covered that a couple weeks ago. If you haven't seen the video, go check it out on my channel. I talked about SoFi, where I had a call option open. And the problem was that I did not respect my stop loss. But this time I will respect my stop loss for SMCI. So I will also going to open a call option, mostly in the money for that upswing. You could play it as iron condor if you want. You could play as a strangle if you want. But this is, I believe that we will probably see a strong commitment from SMCI to, first of all, solve for the problem of their, the whole not scam, but the issue with their accounting firm. Hopefully that sorts out and they do not get delisted, because that's going to crash the stock. And then they are also going to be building out a lot of NVDA, CPUs, GPUs, whatever they are doing it. So that's the whole play on this one. Short-term earnings play, but this could be a sleeper pick for 2025.
Definitely very volatile. You definitely need to respect your stop losses there, Kaye.
This one you will get burned, and I don't want to get burned with SMCI, because the problem is, because it's highly volatile, IV is high, they get a lot of premiums. So if you're buying call options, you have to shell a lot of money for buying call options, especially short-term. So I would not recommend expiration next week. I would at least take 30 days out expiration. So at least, the IV does not, theta decay doesn't happen that fast, but very volatile. You will lose 60-70% of the value, if the stock moves in the opposite direction in no time.
As a shares trader, I kind of I look for kind of patterns really. So obviously the options side of things, obviously the volatility is a bit different, I think, obviously. Because you've got implied volatility, etc. But from a shares point of view, I'd like it to get above this recent peak here, obviously with respect to the trend line at this particular occasion. But I don't know what level that is. It's probably no higher than about 37. I'd like
it's right around 36.31. Yeah. So it's like 3 cents below the last high.
Okay, so that's interesting. When is earnings this week? You say, but what day?
Yeah, I think it's I believe on Wednesday or something like that. Let me just double check. SMCI.
Because I'd probably wait for earnings to play out and see what happens after that. Because if we get a bit of a push above earnings
211.
of this, okay, right.
Tuesday.
Tuesday. So on Tuesday, if we get a push up to this kind of $50 level, which I know is a bit extreme, but it can happen with this kind of stock, and then we come back down and retest it, then that'll be a really interesting entry point, especially with that kind of initial move that's taking place.
Yeah.
If not, if we do get an immediate rejection, then definitely down towards this level, about 37, would be my entry point, because that's a really important point of resistance here, because you've got obviously support back here as well, and resistance here. So this is a key level for me, that kind of 38-ish level. But no, I do like the chart. It's not ready for me yet. I need to show a bit of patience, especially with earnings coming up. But yeah, no, I do like it, Kaye. Thank you. Awesome. Should we move on to the next one?
Yeah. Forgot, what is the next one?
We've got Uber. So this has been really good this week. Good earnings.
Yeah, I mean, honestly, I have talked about Uber in December. Since then, we are up 20+%. You can go check it out on my channel. I also have a new video coming out tomorrow on Uber. I'm doing a whole recap of the earnings, the risks that we talk about, especially in terms of Uber. But from a trading standpoint, if you're looking for trading, and if you want to build a position, so I'm not talking about day trading here. I'm talking about if you're building a long-term position in Uber, I always use cash secured put to make an entry. First, I would look at 30 days out, around 30 delta. So maybe a $70 would be where my entry point would be for this, for Uber. Honestly, I love the stock in terms of the potential it provides, but also the short-term resistance that I see at Uber is around 78.55, where we could see a rejection. But I do expect the gap fill to happen. So if you're day trading it, you could see an upside of 5-6% from here onwards until the gap fill, or to the resistance, actually, the 78.
I think the news about, is it Bill Ackman, who added to his portfolio in a really big way? So I think that kind of propelled this stock up a little bit higher.
Actually, it's not just that. If you look at Uber's financials, it's
so good.
18%, 20%. The free cash flow is exploding. We are going to see a similar trend in the next coming quarters, and because the guidance has been pretty good for 2025. And I know that there are a lot of people are talking about how Tesla is going to come up with a robotaxi. Now, no offense to them, a vision and execution and adoption, those are different stages. So if you think, just take an example of electric vehicles. Electric vehicles, how long has electric vehicles been on the market? I would say at least 8, 9, 10 years now.
Over a decade, yeah.
Right? Do you see a complete dominance of electric vehicle on the street? No. Nope. So think about another thing. So let's say even if all the automated taxis are there, think about the change in perception of individuals from, you have a driver who's going to take you to the airport, for example, versus there's nobody. So there's a mindset shift. Also, you need all the regulatory improvements. Now, that has nothing to do with the stock price. I'm saying the risk that people are talking about Uber, that Uber is going to run out of the business because Waymo is expanding, because Tesla is going to come out with robo taxis, at least not in the short to immediate term. And that is good enough for me to play Uber for a position trade.
And that's what makes the risk reward so exciting for the stock. Even now, obviously you might have to let it settle a little bit, but even now, the kind of potential it has for this year, I think is very, very exciting. Especially with that net income you briefly mentioned there. Net income doubled near enough quarter over quarter, which is insane. That's such tremendous growth from a company such as Uber. But yeah, no, it's very, very exciting.
And just one last comment I would say. So if you just keep this investing thesis in mind, generally the first movers, it is very difficult to beat first movers. You take a look at Netflix. Netflix was in the dumps back in the day. Everybody, thought about Netflix. Disney's going to come and overtake Netflix and is going to become the next big thing in the world. Nothing happened, right? People were dishing out on Meta. But the problem is, if companies are have good balance sheet, it's very difficult to take them out of the market. You will see deterioration in balance sheet. You will see deterioration in their financials before the company really goes down the hill. Take GMC. So not GMC. Yeah, GMC, the GameStop, take AMC, for example. The reason those are meme stocks is because their balance sheet sucks.
Yeah, the
But you
short
can
interest
trade.
is so high.
But you can trade.
Yeah. Very different kind of investing / trading
Yeah,
theories
because
there.
this is more of a position trading, not
Yeah,
day trading, not even swing trade. This is a position trade. So it will take time for it to play out.
exactly. All right, let's finish that one there. Spoke about Uber quite a lot. Where can we find you, Kaye?
Well, you can find me on X. I pretty much post daily, a lot of content on that. I have started rewriting on Substack a lot. So pretty much I target one article a week. You can definitely follow me there. And on YouTube, definitely subscribe because a lot more videos are going to be popping out on YouTube in the coming days. I'm planning to cover AMD, Tesla. If you like those stocks, make sure you follow me on YouTube as well.
And you said Uber as well tomorrow, is that
So
right?
Uber is coming out Monday. Then I have Tesla and AMD on the. I'm working on those, and I had Snowflake posted last week. So if you are into Snowflake, check it out.
Good. We're looking forward to it for sure. Right, I'm getting the charts ready. Have you got the list ready there?
Yes, I have the list ready, and let me see the last.
I'm going to jump into
The first one was Google. You can pull that up while I write the other stocks.
We're just getting the chart ready, and we're almost there. There we go. Google. Right, so we had a pretty rough day, didn't we, on Friday, that's for sure. Dropping down below several technical levels, at least for now. We've got the 50 moving average being broken there. Let's make this full screen so see a bit more. 50 moving average broken there after just kind of holding on to it really for Wednesday and Thursday after earnings. Obviously, earnings was a big drop down. And then obviously these lines as well being broken. And I've got a bit of a trend of, I don't know how you call it, but trend-based Fibonacci, I can never say it, but trend-based Fibonacci drawn. And these are the levels I have on the screen. So we've got 189 kind of breaking that as we speak, but kind of respected all the other levels so far. So perhaps we kind of retreat down to 180, perhaps. I don't know who bought this stock up, I can't remember, but that's my thoughts on that stock. So 180 possibly for Google. Any thoughts, Kaye?
Well, I think I think those are nice levels, and I also believe that when we had that gap up between 180, 178 to 182, that gap up that we had, we could see that gap filling out.
This one here.
Yeah,
that's a good call, actually. Very good call. So I think Justin brought this one up before the stream. He brought up Google and NVDA, which obviously we'll look at in a minute. So I hope that helps, Justin. Gap fill to 178. I think it's both on our cards. Interesting to see.
Yeah. There is actually, to be honest, there is no volume. There's no liquidity at that level. So I wouldn't be surprised that actually we see a pull down all the way to 170s. Right? Right?
Yeah,
there is no volume. There is no
big move. Yeah, good point. I've got 174 here as a level, but below that, you've got big volume around 166.
Now, we could, by the way, see a similar trend like Uber, where we saw a reaction and then we saw a reversal. That could happen if there is some good news which comes out from Google world.
We'll see. Didn't they partner with Waymo, Uber as well?
Well, it's Uber's company, if you think about it, right? Waymo is Uber's company. At some point in time, they might, spin it off as a separate unit, or they might just, start reporting on it much more.
Interesting to see. So we've got loads of requests kind of flying through, so we'll whipple through them now, but we won't rush through them. We've got plenty of time. NVIDIA next up, is that right?
Yeah.
It's been an interesting couple of weeks really for NVIDIA. I'm sure you'll agree. But we've got this kind of trading range between 117 and 130 I've drawn on the screen. You could probably actually bring that a bit lower to about 115.50-ish. So it's about breaking out of this zone for me. I just want to keep it nice and simple there for me. I've had those lines drawn for a couple of weeks now. So far, so good. But of course, what happens now, I'm not too sure because we do have resistance ahead.
Yeah. I think the good news is on NVIDIA that we saw the bounce from this level of 114. And if you actually draw that out, we had that as a support for I think multiple touches. So that's a good sign that we saw some bounce from there. I think NVIDIA in general has been beaten up a lot. but I wouldn't be surprised if we are quickly back to the 140s and 150s, in a couple of weeks on NVIDIA.
Yeah, it's kind of normal price action for NVIDIA. You can see it
Yeah.
on the screen. It likes to jump around a lot, very volatile. But I think for me, if it gets back above 130, I'd be interested, but I'd be even more interested if it gets back above 135. But of course, market conditions at the moment interesting, especially with like Apple, Amazon, all that kind of moving downwards as well, kind of brings down the broader market. Of course, NVIDIA does what it wants anyway, but still, just something to look out for if you're looking at these charts. What's next, Kaye?
Next up is AMD. So we got a comment from Neuromancer. Did I miss the Uber coverage? Yeah, we just covered Uber maybe like 5-6 minutes back, so you can go back and check it out.
Yeah, or you can catch the post recording, of course.
Yeah.
So we've got AMD on the screen here now. Again, I've drawn the reverse of a trend-based fib extension to basically that kind of find lows that could be potentially coming up in the future. We've got this zone that I've drawn here from about 104 to 105. I know it's quite small on the screen, you can't quite see. Maybe I'll zoom in a touch. So you can see there, so that zone I've got drawn here, 105 to 107-ish, seems to be respecting so far, but of course it is ultimately making lower lows. If we do go below that, then I've got 88. Sounds a bit dramatic.
Can you move to the weekly? I'm to show you something on the weekly.
Yeah.
Okay, and if you actually zoom out a little bit.
Yeah. Bit more.
Yeah, zoom out. Okay, so you will. So yeah, this is perfect. If you notice, this was the exact pattern, the first pattern on the complete left-hand side around the 2022. Yes, exactly that pattern. We see that downtrend pattern. Then we see a pattern between July to October of 2024. Yeah, exactly. Then we see a similar smaller pattern over here in the middle between July and December. Yeah, that one. And then the similar pattern is playing out over here. So I think, again, gives you a good opportunity if you are a big bull on AMD. I don't know about day trade. I always look at swing trades and position trades. So my thought process are not towards day trading. But this is setting up to be, if it breaks down to below 100, I'll continue building on the position that I have.
You could. That's not an RSI divergence. I was going to say it's the other way around, actually, isn't it? But yeah, I mean, you've got the evidence of it dipping below the 200 moving average on weekly over here on 2 occasions. So it could actually stay below here for a little while and then push back up after that. So yeah, I mean, it's interesting analysis actually there from you there on AMD.
And keep in mind, if we see a revival in NVIDIA's bull run, it will pull AMD with it along with other semiconductors. So keep that in mind as well.
Awesome. What's next?
Next up is GitLab. Today, I feel like a lot of stocks are.
This is the weekly chart of GitLab. Doing very well. I think you actually pointed this out, didn't you, towards the end of last year?
Yes.
So you must be doing very well on this one.
Yeah, I actually have a decent position on GitLab. I did increase my position by, I think it doubled my position on GitLab. But right now, I think they're reporting earnings. Let me see when they're reporting earnings.
They're on the 17th of March.
17th of March, yeah. So that's still far away. And by the way, the up revision, there are 24 up revisions on their EPS. So we are expected that they will bring over 200 million in revenue, which is, again, very good sign, because SaaS companies have been really in the dumps from the last 3 years. So
they always do well on earnings, don't they?
Yeah, could this year be the one that SaaS companies actually make a comeback? Could be.
So we've got the shields down here, the green ones. That's all positive earnings, and that's just in the last 2 years. So they like to meet their earnings reports.
Yeah, I mean, they have not missed a single earnings. They have always had a surprise since 2021 October.
Interesting. Yeah, I mean, I've got nothing really to add here, apart from maybe if we get back down to this level here of 68. We've got obviously resistance here. This is a bit more of dramatic price action. Not worried about that. That's kind of post earnings, but the actual concrete areas around this area. But we'd have to wait a few more days for that to kind of play out. Yeah, I don't mind 68, but I think I prefer other opportunities in the market at the moment.
So I'm just looking at the volume profile for GitLab, right? There are a lot of volume shelves, right? You have a volume shelf at 68 to 72. Then you have a decent volume shelf from I would say 57 going up to 65. So if GitLab is part of your long-term profile or a swing trade, these are different volume shelves that where you can start to add uh, to your position for that upswing. But overall, it is making higher highs. So it's on an uptrend right now.
Certainly is. And if we do dip below that, and of course, like you mentioned, that kind of 64 level will be interesting to see as well. Definitely want to keep an eye on. I will actually write that down. I'll do that now. What's next then?
Next up is Celsius.
Oh, this one's been beaten up, isn't it?
Yeah.
It won't stop going down either.
It is, and then it did break its long-term support line of 2509, which is not a good sign.
So I brought this up what looks like a week and a half ago, seeing the potential of it breaking above the trend line and coming back down. But I actually came with a caveat on that, and obviously be patient. And of course, it didn't work out. It broke down. It's actually broken down through the lows of $25. So just a really good education kind of lesson there on kind of just be patient with your trading. Don't rush into it, because you can easily rush into kind of trades around these areas, thinking, oh yeah, it's definitely going to break these kind of resistance levels. But of course, the resistance levels are there for a reason. They're there to be resistance. They're not there to be cemented kind of breaking through. Not the best words I've ever used, but you kind of understand what I mean. But yeah, that's a nice lesson in patience, I think. We'll get rid of that because it doesn't make any sense now. The level I've got drawn here is actually $20. Do you have a similar level?
I mean, I had a 25, and then since then I have not drawn anything, but I would say yes, around 22, 20, yes.
And I've got 20 drawn for some reason. I think it must be on the weekly chart more so.
Yeah, I'm on the daily right now. So I would say around 2074 is what I'm seeing. That was the previous resistance. So I'm assuming that will be the next support level for the stock to track.
Yeah, interesting. I think somewhere around that sort of area. It doesn't matter too much in the long term. If you start to accumulate there, then it could be a possible good trade in the future. But again, it's still just a drinks company, so nothing exciting about that. What's next?
Anthony says that was a Wyckoff distribution for the AMD. Yes, you are right. Next is TOST, TOST.
What is TOST? What do they do? I've heard the ticker, but I don't actually know what they do.
I think I've heard the name. I just don't know what they do exactly. So let's see. They operate a cloud-based digital technology platform for restaurant industry in the US, Ireland, and India.
Fair enough. So restaurants. What are these? I mean, it's made a really good move since, let's say, end of September of last year. Really nicely done. Obviously, bounced off the 20 moving average for the weekly chart very nicely there. I reckon that probably looks a little bit different on the daily with all the moving averages kind of coming into one. Yep. So again, nice price action around the kind of 50 moving averages. It's the kind of price action you see on 5-minute chart, actually kind of dipping below moving averages and pushing back above it. So it's interesting to see that on the daily chart for a company. I don't know where I would buy this, if I would buy this.
I mean, if you're looking for trading, right? I mean, 38.86 is a point of control, especially that's where the biggest volume shelf sits right now. That's where most of the liquidity is. That could be one entry point, I would say, for a pullback. But the stock has run up a lot. It's up 113% for the year.
I would be concerned about if it makes a lower high, then perhaps it might be entering a bit more of a channel.
Correct.
Because you could come into something a bit like this, where the channel might be obviously not perfect drawn here, but a channel downwards until we break up a bit higher. I'll leave those lines there. So I'm sure that this will get mentioned in about 3 or 4 weeks' time, and then we'll come back to this and we'll see that it was completely wrong. But yeah, what's next?
Next is your favorite stock, Palantir.
But it was my favorite stock. You always say that, but I haven't invested in it for ages. And I really wish I did. So, I mean, earnings were out Monday. Again, they completely crushed it. Revenue came in a lot higher than they expected. And obviously, a huge gap up was created as a result of that. 14 or 15%, I think it was on the day. Actually, I think it might be higher. I think it might be 20% on the day. And then a few days later, it went up another 10%.
Yeah.
It's just unstoppable, this stock. Really, really good. The investors must be super, super pleased.
But I'm very surprised. But I'm very
Kaye.
surprised. This company brings in $827 million for the quarter, right? So it's less than $1 billion per quarter. And it's a company which is $250 billion market cap. Now, I know all the thesis they're talking about, the future is going to change and all that. But just from a financial standpoint, and it's creating gap ups after gap ups. So at some point in time, the valuation will start to play a role.
Of
Is
course,
it I don't know if you want to trade the stock at this level, because the potential of upside versus downside risk is much higher. Like if let's say if you buy in at 110 and the stock just pulls back from here to its previous highs of 83, you'll be down 25%.
Yeah. Do you know what its PE ratio is?
PE ratio. So the forward PE is 262.
That's it's like Tesla levels.
Yeah, but it's not a Tesla, right?
No, yeah, but I'm just saying that's the kind of valuation it was given.
I know the
400
fan group is like Tesla. I know there's a big Palantir fanboys on FinTwit and YouTube. But the point is, if you already are in a position when you bought in the 10s and 20s and 30s, 40s, 50s, you are up handsomely. The point is, where do you go from here? Like, is it a tradable stock? I don't know. I don't think so. I won't touch it.
I think, like you said, it's tradable when it gets back down to 85.
Yeah, because that you'll be down 25% on your. Now it could go up to 300 from here, but it's not part of my risk profile. I won't be trading Palantir. By the way, I'm up 300+% on my position, so I'm happy about that.
I'm sure you're very happy. Yeah.
Yeah, but that doesn't mean that I will trade Palantir at these levels.
And the Mac Daddy Spuds says it's overboard as I won't finish that sentence. And we've got another one here from Mozkid saying, what strategy are you using, please? Not specific to this stock, of course, because obviously this one's a bit more of an anomaly. But I typically trade breakouts. So, for example, we'll just ignore these candles. So you've got previous resistance points, obviously here and here. If the stock trades above that and it comes back down and retests it with as much confluence as possible, I enter here and then move towards the target price, which hypothetically today could have been $100 for Palantir, which would represent 15% or whatever it is. And that would be my trading kind of strategy mainly. Kaye, do you want to describe yours? Obviously, yours was a bit more options related.
Yeah, so for me, I generally trade options. So I sell options a lot. I like stocks that trade in a range. So I'm more of a range bound trader. Mm-hmm. But I also look at breakouts in terms of swing trades and position trades.
Awesome. So I hope that helps you there, Mozkid. Thank you for the comment. We'll move on to the next chart. What have we got?
Next is ExxonMobil. We already covered Tesla, so that's why we'll skip Tesla and we'll go to ExxonMobil.
Oh, click on the wrong screen. Okay. ExxonMobil, I've got lots of lines drawn here. What have we got here? We've got some resistance that's been respected in the last 3 or 4 weeks. I don't look at this stock much. It's nice to come back to the lines and see they've been respected. We've got a bit of support here, 108.50 by the looks of it. Obviously, previous support back on June of last year and September of last year. So an important point for ExxonMobil. Would you agree?
I'm sorry. I got distracted for a second. Looking at
a key level, perhaps.
Thoughts on Palantir. So I was looking at that. Let me look at this one. I like the energy stock, honestly, and for me personally, if I want to, this is exactly in the range right now. So between 106 and 110 is what I have drawn my ranges on my side. And every time it pulls back closer to 106, I generally tend to sell options, add the money. And I basically then sell a covered call at the next range or add the money a little bit above.
106 to 110, did you say?
Correct, exactly. That's why that's in the range right now. So that's how I'm trading right now for ExxonMobil.
It's looking dangerously close to the bottom of this channel, isn't it? And didn't he say he wanted to drive oil prices lower, Trump?
Well, he says a lot of things.
Yeah, he does.
What
It
he
does say a
says
lot of
today
things.
will change tomorrow. So it's gonna be a fun show for next couple of years. We'll see. But if you think about it, the energy prices have really come down since what? Back in September, ExxonMobil was 125, and we had completely stopped talking about that stock. But now, when it comes to start coming closer to $100, it starts to get interesting again because it is a pretty profitable company.
Just before we move on to the next stock, obviously keep them coming in. We've probably got about another 15, 20 minutes of this. If I could just find the right thing. Obviously, the bottom left-hand corner there, do subscribe to the Trading Triangle on our YouTube channel. We'll be looking to do some special episodes in there in this coming year. They won't be too often, but when they do happen, they'll be really, really good. I can assure you of that. So go ahead and subscribe over there on the Trading Triangle. And obviously, once again, we do really appreciate all the viewers. We couldn't do it without you, pretty much, especially this section, which is the audience request. So yeah, keep them coming in. I'll leave that down there in the bottom left-hand corner so you can see. It's not too imposing. What have we got next, Kaye?
So before we jump on the next request, I do want to touch upon Neuromancer's comment. So
Okay.
I don't know who this person is, Martin person, but as what he's saying, I hear people throwing around the wrong numbers for Palantir. Let me help you. CFFO for 25 should be basically what he's saying, that it is not expensive as it looks. I don't know about it. I am not a Palantir expert here. I only got into Palantir because of Sean and Nate, who was part of the Trading Triangle. It looked nice. I don't trade Palantir, so I really don't have comments. But just from this perspective of trading and risk management, your stock is up crazy, right, at this point in time, and has created multiple gaps. The only issue is if you do not have a position in Palantir today and you open a position in Palantir, the chances of your upside potential to the downside risk, that's how I look at it. I'm not saying that the stock will come down to $80. I'm just saying it looks highly probable it will come down because there's a gap, rather than going to $200 from here onwards.
Yeah, and we've said that before, haven't we? So,
yeah.
Right.
Next is APP.
I think they report earnings, don't they, this week?
I don't know what this company.
Yeah, the 12th on the Wednesday, they report earnings. It's been going really, really well. I don't even know what they do. I think it's probably something around apps.
Let's see.
Perhaps. But yeah, since the last August of last year, I mean, wow, what a run.
So they engage in building a software-based platform for advertisers to enhance the marketing and monetization of their content in US and internationally.
It's only up 500%.
Yeah, it operates through two segments: software platform and apps.
Cool.
Oh, this is a cool ticker. I never knew about this company.
Yeah, might be a bit late now.
Yeah, of course. But it's good to know these companies.
Yeah, of course. At the beginning of 2024,
my God, it crushed 187% in 1 year. Oh my God.
I mean, if you got into this, then congratulations. You're doing very, very well. Maybe
listen, I commend. Everybody is happy about all the stocks. I'm like, whoever got this one, crazy. Good job.
C-Spill here and Balaji Palanipan, which I think I did very well with that name. Yeah, awesome. So thank you for doing this one up.
Maybe, hopefully you might have retired by now. Who knows?
Exactly. In terms of analysis, it's very, very tricky. I mean, obviously, after a large move, you do tend to have a bit of a kind of a channel or a bull flag or a some sort of wedge. So perhaps we can have a little bit of a play with that. But of course, nothing was cemented. We've got that there and perhaps that there. Maybe even bring that up a bit higher on the weekly chart. So maybe we've got a bit of a kind of wedge forming here for app. So just be aware of that when you're trading. Keep drawing lines, keep kind of playing with it. Obviously, keep drawing multiple lines as well. Another little tip from me, at least. Keep drawing multiple lines, redraw them, kind of draw them in different directions. I know it sounds a bit silly, but it just gives you that kind of perspective when you're drawing your charts and gives you that kind of experience that every trader needs, I think, in the long run. Anyway, waffling on a little bit. What's up next?
Next up is Palo Alto, PANW. I think they report earnings as well this week.
So many earnings. Fantastic.
Yeah.
Good
So
stuff.
if you are not an earnings person, you don't like to play earnings, I would just hold.
Go back into hibernation. Yeah.
Yeah, just wait for the earnings to pass and then. But let me just look at the implied move. I think it does have a pretty crazy implied move. Let me see.
Actually gapped up on Friday.
So the earnings move is around 8.6. So let's say 9% is the earnings move, but 62% of the times we overestimate the move. So if you think about 8 to 9%, you could play a strangle, iron condor. As long as it stays within that range, you will make money. But if you are if you don't want to play earnings, I wouldn't recommend playing earnings.
No, I probably won't be playing earnings, but I would look at a couple of levels here. Post earnings, and that would be this level here to green line of 244. That's 204. And obviously this area, this zone I've drawn actually previously before looking at this chart today, 179, 182. So that is apparently of interest for me. I think that must be just a previous resistance level. But this level down here is really exciting. I'm not too sure if we revisit that. If we do, then I'll be very, very excited for this one. 200 moving average and obviously lots of volume and obviously lots of resistance as well around this kind of 170 to 172 level. So yeah, plenty to look out for. And I think, again, it's Balaji Palanipan who brought that one up as well. So thank you for that one, Balaji.
Next up is JOBY, JOBY.
JOBY. Yeah, so I've recently traded this one.
Okay. Tell us about your thoughts on this one then.
So I believe it was a retest of this line. I had to hold on to it for a little bit, and it was very close to my stop loss, and then it went up to my first target profit, which was 935. No, that can't be right. Maybe it was here. I traded it here to there. I don't know when it was, but I basically made money off it, and it eventually triggered the stop loss, and of course, that was the end of the trade. But obviously, subsequently, it now has broken this kind of trend line going downwards and the moving averages. So it really needs earnings, and it's here on Wednesday, the 19th of February. So it's not this week that the earnings is on, it's the following week. So it'd be interesting to see what happens there. But these are my levels. You can see them on the screen. Any further thoughts here? It's in a range. I know you like a range.
Yeah, but I don't trade all of the stocks.
No, I can't tempt you. No.
No.
Okay.
You did tempt me on grab, but not on this one.
Okay, right. We'll move on. And but yeah, just be careful of this kind of range at the moment if you are trading JOBY.
I think next one is also one of your favorite stocks, Amazon.
Amazon, yes.
Tell us about Amazon.
I did recently trade this one as well, which is really good. We had a wedge. I'll redraw it for the purpose of these comments.
By the way, before you jump on, so for folks who are watching, I would highly recommend, if you want to track all these Max 7s, Sean does a very good analysis on these, especially on the chart pattern. If you like that, make sure you join the TTR. It's free, so it doesn't cost you anything.
It is free, but if you get the Max 7 stuff, that is actually paid. So just to put that in there.
I didn't know that.
But you didn't know that because you're already in. But yeah, we can see on the chart here, obviously this with the bull flare kind of coming down. We had an intraday retest for this this trend line, which is where I entered, and subsequently it went up really, really nicely. Went up to 233. That was my target profit point. Then I had another one at 240, so I took one there, and obviously came back down and triggered the stop loss for the rest of the trade. So that's just trading, but I made good money on it, and we move on to the next trade. Obviously at the moment, we are coming heavily down because of the earnings report that happened on Thursday evening. I didn't actually see it much in detail. Was there anything wrong with it?
Well, let's see.
It must be guidance or something, because I think I saw a double beat. So it must be kind of
did see a double beat.
Q1.
But I think I don't track Amazon that closely these days.
I have done, but I have lost touch with a lot of them.
I don't know why it was pulled back. It has to be guidance, because there's definitely beat on both. It's a beat on EPS on both GAAP and non-GAAP as well. So I don't know why. It has to be guidance.
Must be. So level of interest, if we do come back down, is 225. You can see that on the screen. It's the green arrow, the green line there. That's kind of it, really. I mean, if it does come back down below that, and obviously 212 or anywhere that touches this previous trend line, But yeah, they're my levels of interest for Amazon.
If anybody knows why Amazon went down, I think what I'm reading right now, very briefly, is both Google and Amazon, they are planning to spend a lot more capex on AI infrastructure, so that will continue. Was that the reason, or was something wrong with their growth slowed down in AWS? I don't know exactly. I haven't, dig deeper into the earnings.
It'd be interesting to see what Amazon can do with their chips, because they're talking about making their own chips now, aren't they?
Yeah. I think both Google and Amazon, they are working on their own chips as well.
Yeah.
Specialized ones. Next up is another favorite stock of mine, which is Datadog. And I mean, since they created the gap up, they have not come down. So I have not been able to get in. But I mean, it looks a pretty nice chart to me. And as long as they can maintain this, they can bounce off the trend line, which has been on an uptrend since, I would say, August of 2024. Yeah, that's the one.
Well, that's just kind of near term, kind of almost a bit of a bear flag.
Yeah, right now, near term, yes. But from a long term standpoint, it's still in the uptrend. Unless it breaks that trend line.
If you zoom out, that's really good. So we spoke about this a few weeks ago, didn't you? That's why I drew these lines, because of that, because I liked it in this zone, but never quite reached that zone. Maybe it went after earnings.
They report earnings this week. So they did have a beat both. They have also always had a surprise beat on both EPS and revenue. So we expect to have continue this time as well. It will be made on the guidance. So just like GitLab, just like Datadog, like for SaaS companies, the key is how's this year looking for them, since they have been really beaten down last couple of years.
I think that's the same for a lot of SaaS companies you just mentioned, wasn't it? So
yeah,
we'll have a lot of those kind of conversations, I think, throughout this year. No, interesting. I think Manisha brought this one up. So we've got one more for Manisha, is that right? SMR?
SMR. What is SMR? I don't know.
It is New Scale Power Corporation, which is not one I've heard of. $25, that kind of area. Seems to have bounced off really nice off a previous resistance point, which I would have loved to have got in there. And that would have been up quite handsomely. Since then, earnings is 14th of March, so still quite a while out. We've got what looks like a bit of a trend line kind of coming up there. So it's one to watch. It's not one I would trade in the near term. But keep it on my watch list, I think, for sure, because it looks like it makes some big moves. And as a breakout trader, I like big moves. Any thoughts on this one?
No, I think you covered it pretty well. Since we have 2 minutes, we have one more. We have Baba. That's your favorite stock for sure.
It is. At the moment, it is. I drew this level 107, and full disclosure, I'm in this position, of course. Excuse me. 107 looks like it was a correct move, because obviously we touched it and then subsequently broke straight down after that. Looks like we're kind of retesting the previous trend line here on the right side. So it'll be interesting to see if we can hold up. Obviously, we do have HSI opening up in about 6 hours. So that would be interesting to see if it gets a bit of a push overnight before the US stock market. That's always one to kind of keep an eye on there as well. If you are trading Chinese stocks, do be aware of the HSI. Neo, Baba, Baidu, JD, Pinduoduo, all those stocks do trade within that kind of market, or at least price action of the market. But yeah, interesting for sure, Baba. I like it for further upside. I mean, why not? It's got the momentum. It's picking up in terms of chats as well on X and various other platforms. So yeah, we'll make it continue. I'm in a position I'm very happy.
So right on the Chinese stocks, there's a ETF request FXI. That's, I believe, the Chinese ETF.
Actually, I don't know. But yeah, look, China large cap.
Yeah.
Well, look at the gaps on that. Yeah, I mean, you can kind of almost see-ish, I guess, a trend line there, if you can count that. These ones are very hard to trade. I know Chinese stocks are typically more technical than they are fundamental. But even still, this is too gappy for me, I think. This is one of those you kind of buy and hold if you're into China.
Yeah.
In my opinion. Yeah. So I hope that helps. I don't know who brought that one up. But.
And the last request is Snowflake. Also, we got a
Snowflake, yeah.
comment from Neuromancer around Amazon. It was due to lower guidance on growth. So thank you. Appreciate that. I think we did think about that would be the case. Yeah.
Yeah, interesting to see if they can beat their guidance going forward. Otherwise, it could get a bit ugly.
Okay.
Snowflake. So I'll give this one to you because you brought this one up the other day and you caught my eye actually.
Yeah. So for Snowflake, I would recommend also if you are into the stock, definitely go and check out on my channel. I did have put Snowflake as part of my top 5 stocks. And primarily the reason is because it broke through this downtrend line very nicely, and it is heading up towards that gap that was created back in last February of 2024. So that's again long-term position kind of a trade rather than a day trade. So right now I'll just continue building on that position for that upswing to fill that gap. That's what I'm targeting. So that gives you a 13% to fill that gap, and for the next resistance is about 17% or so. But what's crazy about Snowflake, it once it starts moving in any direction, it starts to gain levels very fast, similar to some of the other stocks. Like, so because there's a lot of momentum gets built up. It used to be a retail favorite stock, now it's not. But again, these things, they it moves very quickly once it starts moving. So that's why you build positions as you go through those weaknesses.
So I'm liking accumulating here in this zone, and it's a purely personal thing. It's not financial advice, just because of the amount of kind of resistance we've seen in this area. Now, of course, I say zone because it's not a specific level, whereas other stocks sometimes they get stopped at specific levels, and I think that's down to the volatility you kind of alluded to just then, which is why I like to refer to zones with these sorts of stocks. But you can see, just from a purely technical level, we've got obviously previous resistance. This is a weekly chart, by the way. Previous resistance going back to February of last year, as you mentioned, a big drop down. Had a tricky year, but came back up towards the end. Kind of created this kind of cup and handle pattern you can see on the screen. But we are seeing resistance naturally around this 200 moving average on the weekly. But I still don't hate kind of adding here, and obviously having a stop loss maybe somewhere down kind of 167, maybe 160 if you're feeling a little bit more, risk averse. But the upside to this is 25%, and that's, as you said, it's a momentum type stock. So if it gets that momentum, it gets rolling, then you can really kind of build the position out and obviously make hopefully a lot of money. We'll move on. We've got obviously, I think we'll just squeeze in one more while we're here. We've got a great session from Trey, thoughts on Uber. If you go back into the session, we've got lots of thoughts on Uber. We stuck on that one for quite some time, but you can catch that on obviously on YouTube, or if you, I don't know if you can scroll back on X, but if you can, then great. Another comment here, obviously Michael Burry and other big short investors are long China right now, but he was also short the market in November 2023, and you can see what's happened since then. Been pretty much up since. But we'll just touch on Hood very, very briefly, and then we'll call it a day. Is that all right, Kaye?
Yep.
Awesome. Now this is the weekly chart. You can see it's actually gone straight up. At the moment, I mean, it's one of those stocks, a bit like PANW, a bit like SoFi, maybe less so SoFi in the last few weeks. But yeah.
So just a joke on the SoFi. So SoFi was reporting earnings. There were a lot of folks on the FinTwit. They were like, "Oh, it's going to $45. It's going to $45." And guess what happened? It's just back to its. The point is sometimes what happens is there's a lot of momentum that gets built, and then folks just push videos on YouTube about price targets. It doesn't work that way.
No, of course. You can have a lot of hype around these sorts of stocks, but I would say the company itself is posting some really good numbers throughout all of these kind of earnings results.
SoFi is doing amazing. As a company, I have positions in SoFi, but sometimes it's very difficult to wrap your heads around. It's like from $15 it'll go to $45. It's a bank. It's a fintech. It's not autonomous vehicle coming on the road. You have to understand. So Palantir, I can understand why it's going up, right? Because there's a lot of hype around it, but there's also some technology. SoFi is, end of the day, it's a bank. It's offering you solutions. So basically saying you come to SoFi and you can do everything end to end. That's what SoFi is offering you. It's not revolutionary changing your life.
No, it's just a very good bank. or at least at a very
it's an offer
appealing
bank,
bank.
right? You can get loans, you can do banking, you can do mortgage, you can do credit cards, you can do financials, investing, retirement, everything. Great. It's not revolutionizing your life like a robot, for example. So the hype makes a lot more difference.
So I think just turning to technicals on Hood, we'll finish off for DKNY here. I've got a gap drawn down here at $40. Obviously, it's way above that now. We may not see that for some time, of course. If we do see a bit of a drawdown, I've got 47 drawn here. And then lastly, to touch kind of a personal note, I actually opened a Robinhood account in the UK 2 weeks ago. So
Okay.
I'm on the Robinhood train. It doesn't have options or anything like that just yet, at least here. So
Really, they don't have options in Robinhood in UK?
No, it's a very basic app at the moment in the UK. Probably something to do with regulations or something like that. Excuse me. But yeah, that's it really for the chart sessions. Any mentions here on Hood for you?
No, I honestly, I'm down on my Hood position, at least from a covered call standpoint, because I opened a covered call. So, well, it is what it is.
It is what it is. And yeah, so that was a great session. We had almost 5,000 kind of viewers today, which we really, really appreciate. Keep coming back every week, 6 p.m. UK time and 1 p.m. Eastern time for US guys over there. Any final thoughts, Kaye, before we wrap up?
My final thoughts are, if you trade earnings, just be safe. Make sure you follow your stop losses, keep your risk intact, and enjoy the show.
Yeah, and obviously a massive thank you again for Wolf letting us use the platform. We really, really appreciate it. And yeah, subscribe to us on the YouTube channel. We don't say that enough, so we're going to say that one more time this week. And I hope you have a really good week. Trade safe, be careful, all that jazz. And we'll see you next week. Take care, everyone.
Take care.